I've got the Minister with me, and for a man who's been up all day, he is looking remarkably fresh. Minister, I just want to get a sense from you before we begin the conversation into the budget. Just how difficult was it for you to construct this budget, given the environment that you're operating in and the various demands that have been placed upon the fiscus?
Well, budgets, for a household or for a country are approximately the same. If you have too many demands, you've got to decide which ones you put aside and which ones you include. And what helps is that if you have a clear focus. So we have two clear foci as a country. The one is that we are not going to allow the European situation to paralyze us. We've got to find a way of working our way out of that and working with our African partners to grow the African economy more broadly, but the South African economy as part of that process.
Yeah.
And the second is that we want to invest in infrastructure as a way of increasing the growth potential of our economy. Once you have that focus, the rest is reasonably okay.
Yeah. Now, from the comments that I've had, two issues have emerged for me. One is that this is a very bond-friendly budget, number one. Number two, the biggest howl that I've had is around the capital gains tax. Let's begin on the capital gains tax. Some people are saying it was a shock. They did not expect this tax or the magnitude of the increase, effectively 50% on where we are. What was the rationale in coming up with this tax, the tax increase, particularly given the level of company profitability and also where we are in terms of market confidence with the European crisis around us?
Well, firstly, the increase is less than 50%. Secondly, there hasn't been any change to the capital gains tax regime for 10 years. Thirdly, we are out of sync with every country of equivalent stature in the world, where inclusion rates are up to 100%. The maximum for individuals is 33%, for businesses 66%.
Right.
And we've got a whole lot of exclusions in our system, whether it is in respect of your house or small businesses that have a particular capital gain, all of which ensures that the small person within our society, individual or business, is not negatively impacted. But the most important point, we live in a very highly unequal country and indeed a highly unequal continent. And what's very important is that we need to go beyond I, me and myself.
Right.
Because if we, after so many years of apartheid, are going to work our way out of this environment, we've got to create a greater level of solidarity and a greater level of sharing, and part of that sharing is to make a contribution. So if you, all we're saying is, when you make a capital gain, share a little bit with others, so that they can also benefit through the tax system, through redistribution. So we know it's an emotive issue. I think it's a bit overplayed. Yeah.
The 50%, if I may just explain, that came from the increase in the capital gains tax from 10% to 15%. That's where the 50% is coming from. But let's move on. Let's talk about...
Yeah, depends what you look at, you see.
Indeed. Let's talk about the bond friendliness of the budget. Was the consideration about what the rating agencies could potentially do uppermost in your mind when you constructed the budget, particularly in relation to the numbers that you're coming up on the budget deficit going forwards? Because it's all a reduction going forward, and it's very, very clear that the government is keeping a very tight rein on finances here.
We have, fortunately in South Africa, said that we would work with three guidelines on fiscal policy.
Sure.
That we would be counter-cyclical, where the economy is not recovering as fast as it should, where it is still facing negative winds from different parts of the world. Government has to play a supportive role.
Sure.
In 2009, we did that by increasing the deficit massively and ensuring that government actually bore the brunt of keeping the economy going and saving jobs to the extent that we could, although we lost 1 million jobs in that context. So what's crucial is the principle of countercyclicality playing itself out. The second is debt sustainability. And here we are saying that over the longer term, we've got to make sure that we have a sustainable path. And the right path, after the last, say, 2 years of experience, is not to consolidate the deficit too fast.
Right.
That's what Europe is doing. And as a result, you have very little growth prospects in those countries.
Sure.
And so towards the end of last year, I think the realization is keep a balance between stimulating the economy in a limited way and consolidating the deficit to the extent that it proves credible.
Right.
And we've done that. So our path is one which is credible,
yeah.
It is sustainable, And we can't say we're dictated by what the bond markets do. That's one consideration.
Sure.
But we understand what it means to run a sustainable country and a sustainable fiscus. And this is the South African way of doing it.
Yeah, but some would argue, Minister, that given where we are in the global environment, particularly given the wobble that Europe has had, you are cutting down on financing in the years ahead, for the next 3 years or so. Would it not have been better to have given the economy greater stimulus than you have done?
Well, that's always the balancing act, isn't it? To have credible steps going forward,
sure,
but also make sure on the consolidation side, but make sure that we don't shoot ourselves in the process. The path before you is the path that we've chosen. And we hope that whilst Europe might be in trouble, that the rest of the world will begin to recover, hopefully. Not to the same levels that we've seen before. Africa is the second largest and fastest growing region in the world. That offers interesting prospects. South African business must wake up and seize these opportunities.
Yeah, but some people are saying, Minister, the government could have been bolder. You could have been bolder in terms of the steps that you take to try and attract investment into this country and onto the continent, because South Africa is being used as a gateway into the rest of the continent.
Well,
could you have been bolder?
I think we've been quite bold. One of the things we've got to watch is what do we pay in debt service costs.
Sure.
By the coming year, we would be paying 100 billion rands out of 1 trillion rands, 10%, close to it. And we don't want to be in a position where South Africa was 15 years ago,
sure,
where as a result of very high debt service costs, you crowd out boldness, right? Because you don't have the space, you don't have the fiscal space.
Yeah, sure, you've taken a leap of faith.
To spend on things that you think you want to spend. So you've got to manage two things, as I've said repeatedly now. One is a credible way and a sustainable way in terms of debt management and deficit. And the second is to keep some stimulus going. Remember that I think this year or the coming year we have a real growth in expenditure of 2.6%,
right,
which is something that very few countries north of us are actually doing, particularly in the European context.
Yeah. Now, Minister, one of the issues that you came up with, which was a new initiative, is of course the new layer of government around the public procurement officer. Bold step that was, but some people are saying it's another layer in government. And also, critically, how do you make sure that that is effective in itself? Because it's well enough to lay down these plans, but it's another thing, as you would know, to make it work and make it work effectively.
No, I'm afraid those are unhelpful arguments. Here we take an initiative. Then what you must say,
sure,
and those who are talking to you must say, is let's give them 6 months or 9 months to show whether they can deliver and what impact they can have. And if they've got a better idea, tell them to come and talk to us. Right? We are quite determined to make this work, and we will make it work.
Growth has remained below the 7% threshold that you need to try and create extra jobs for this economy. How do we get there? I mean, you have done a difficult balancing act here, but looking out, how do we ramp up that growth so that it reaches that threshold that ensures that employment increases?
Part of the story is to A, say that we will invest more in infrastructure, create the efficiencies that we need in this economy. B, undertake more vigorous regional integration so that both our partner countries and ourselves benefit from this exercise. And C, rebuild sectors like manufacturing, mining and agriculture, which are highly job-absorbing parts of the economy that are not as active as they should be.
Lastly, Minister, the funding around the infrastructure projects, 810 billion rand over the next 3 years, 3.2 trillion over the next several years. How is the government going to fund those infrastructure projects?
But I think we've spelled it out very clearly in the speech. We are operating on what we call a sovereign fiscal framework, which ensures that the sovereign as a whole is operating on a very sound and credible basis. Secondly, many of those projects already have funding, either from our state-owned enterprises or from the fiscus itself, or from the DFIs. Thirdly, we believe we can leverage partnerships from multilateral institutions, from the private sector, and like we said in the speech, no good project is going to run out of funding.